What happens to your clients' index portfolios when a mega IPO hits the market? Hi, I'm Rodney Comegys. Today I'm breaking down what actually happens when massive IPOs enter indexes, from free float mechanics to how we execute these transitions behind the scenes. When we think about mega IPOs, and really all IPOs, we think index providers should do two best practices. Number one, fairly quickly after the company becomes public, it should be included in the index and therefore in the index fund. Somewhere in the neighborhood of between maybe 5 and 30 days is an appropriate time frame so that we can get price discovery in the market and determine the liquidity of the security and include it. Part two, our best practice, is based on making sure the index reflects only the shares available in the market and not the entire market capitalization of the company. So when we think about SpaceX, who is being reported to have about a $1.7 trillion valuation, but is only selling about $75 billion worth of the company, in the index, it should be included based on the $75 billion, and that's the concept we call float-adjusted indexes. When we think about companies going public, the most important thing to determine how much is in the index is how much of the shares are available for all market participants to buy. So in the case of SpaceX, the company's floating or selling $75 billion worth of stock. And that's what's going to be included in your index fund. At a $75 billion market capitalization, it makes SpaceX in your index fund roughly the size of Federal Express, not the size of the Mag 7. This concept of float-adjusted indexing has been a part of Vanguard best practices since the early 2000s, and we really think it's the only way an index should be run. When it comes to index inclusion events, including IPOs, it's all about three things. It's about preparation, expertise, and then execution. So to prepare for any index inclusion event, we have an awareness of what's happening in the market, and we're thinking ahead as to what will be taking place. In the case of an IPO, we have early indication that it's going to take place in the market, and we start to look at the data available and the market conditions. We then ensure that the index provider follows their methodology so that we can execute and track the index. At Vanguard, we have the experts to do so with over 15 years of experience on average on our equity trading desks. So this is not the first time that we've encountered a large trading event, and we've been doing fast track IP inclusions for over a decade. Finally, on the day of the IPO, we're looking first and foremost to track the index. That's what the job of an indexer is, after all. But we also have to think about the liquidity available in the market, and we may deviate slightly in a risk-controlled way in order to match the index and achieve the best execution. Be sure to like this video and subscribe to this channel to hear from Vanguard's thought leaders.